Okay, let's get into it. You know when you see one of those dense corporate earnings reports? It's just pages and pages of numbers and jargon. So the real challenge is finding the story that's hidden inside. Today, we're going to crack the code on the latest results from Finolex cables.
All right, take a look at this. This is the heart of it all, a statement of financial results. I know, at first glance, it's just a wall of numbers, but I promise you, within these lines and columns, there's a story about growth, about challenges, and about the future of a huge company. Our mission is to pull that story out piece by piece.
So, where do you even start with something like this? Well, with any report, you've got to find the headline first. What's the single biggest thing they want you to know? Let's find out.
And boom, there it is, a massive 35% jump in revenue for this quarter compared to the same time last year. That is a seriously strong signal of growth. But, what does a number like 35% actually look like? Okay, this chart really puts it into perspective. The company's revenue shot up from just over 1,182 crore rupees to almost 1,600 crore in just 1 year. Seeing it laid out like this really makes that 35% feel real, doesn't it? That's a huge leap in the actual cash coming into the business.
And here's what's really crucial. It's not just that they were making more sales, they were also more profitable. Profit after tax went up from about 124 crore rupees to almost 136 crore. This shows that even with some major challenges, which we're going to get to, the company's bottom line is getting stronger.
So a 35% jump in revenue is fantastic, but it immediately begs the question, why? To answer that, we have to look inside the business and see which parts are really firing on all cylinders. Now this is really interesting. This chart breaks it all down for us. You can see right away that electrical cables are the absolute engine room of this company, making up a whopping 62% of their revenue. Copper rods are the next biggest piece. This tells us that any big growth story is almost definitely happening in these core areas. And here is the proof. The report tells us the actual volume of electrical wires they sold shot up by 28%. And get this, optic fiber cables, a key part of their communications business, grew by an even more impressive 34%. This is so important because it's not just about higher prices. They are physically selling a lot more stuff.
So what does all this mean for the real world? Well, a surge like this in electrical and fiber optic cables points directly to a boom in big sectors like real estate, construction, and huge infrastructure projects. Think 5G rollouts. The company's success is really a mirror of what's happening in the broader economy. But no business story is ever that simple. It wasn't all smooth sailing this quarter. The report also shines a light on some pretty significant headwinds the company had to navigate. This quote, and this is pulled directly from their press release, tells a huge part of the story. They were dealing with a major challenge, the rising cost of their raw materials. I mean, think about that for a second. They had to raise their prices 5 separate times in a single quarter just to keep up.
So let's just break that down. For a company literally called Finolex Cables, the price of metal, especially copper, is absolutely critical to their business. When those prices spike, it squeezes their profits and forces them to pass those costs on to their customers, which is always a really tricky balancing act.
And it wasn't just material costs they were juggling. The company also had to deal with a massive shift in government regulations. India basically combined 29 different labor laws into 4 new codes, a complete overhaul. Because of that, Finolex had to reevaluate what it owed its employees for things like gratuity, and that resulted in a one-time charge of just over 6 crore rupees this quarter. Okay, so we've seen the strong growth, but we've also seen the serious challenges. That brings us to the really big question. Where does the company go from here? Well, the report actually gives us some pretty clear clues. The big story looking forward is all about investment. Even with those rising costs, Finolex is doubling down on growth. They are actively expanding their ability to make more stuff. This is a clear signal that they expect the high demand we saw this quarter is going to continue.
And they're being specific about it. They're building a new facility to produce something called preforms, which are essential for making optic fiber. Phase 1 is already in trials and should be up and running very soon. This is going to add a ton of new capacity to that high-growth communication segment we were just talking about.
All right, so we've looked at the numbers, the growth, the plans for the future, but there's one last really crucial question. Can we actually trust any of this? That's where this document comes in. Every public company has its books reviewed by an independent auditor. The auditor, in this case it was the global firm Deloitte, issued what's called an unmodified review report.
Now, I know that sounds like some dry technical jargon, but it's actually one of the most important phrases in this entire packet of documents.
So what on earth does unmodified mean? Well, it's pretty much the best thing you can hear. It's basically a clean bill of health. It means the independent experts sifted through the company's books and concluded that everything is presented fairly and accurately. It's a stamp of approval that gives everyone, including us, confidence in the numbers we've been looking at.
So after all that, what have we really learned from cracking this code? We've learned a ton about Finolex, for sure, but we've also picked up a method for understanding any company's financial story. Let's just quickly recap those key steps.
It's a really simple but powerful framework, right? First, you find the big headlines, revenue and profit. Then, you dig into the different parts of the business to figure out the why behind those numbers. Super important, don't forget to look for the challenges and complications. Then, check for clues about the future. And finally, always look for that auditor's report to make sure it's all legit.
And that leaves us right here with his final thought. Finolex's story this quarter is one of really impressive.
Welcome back to the deep dive. We are shaking things up a little bit today. Usually you know the drill. We're wading through some huge PDF report or tearing apart a book to save you the time. But today our source is completely different. It's just a single image, one JPEG.
It sounds a little minimal when you put it that way, but in the financial world, a single image, if you know how to look at it, it can hold more narrative than an entire quarterly report.
Exactly. So we're putting on our detective hats. We are looking at a stock chart. Specifically, it's a forensic analysis of the chart for Finkables. That's Finolex cables on the National Stock Exchange. And the timestamp is today, Tuesday, February 10th, 2026. This is a live autopsy of the market.
I don't know about autopsy. That sounds a bit morbid given the market is very much alive. Maybe a biopsy.
A biopsy, okay. I like that.
We're checking the vital signs of a living thing to see if it's sick or if it's, I don't know, about to run a marathon.
Fair enough. Biopsy it is. And before we even get into it, we have to do the disclaimer. We have to say this. We are not financial advisors. We're not telling you to buy, sell, or hold this stock.
Absolutely not. The mission here is literacy.
Yeah.
We're just using Finkables as a textbook case to understand how to read the narrative of price action. I mean, whether you trade crypto or commodities, the psychology we're about to decode, it applies everywhere. It's about reading human behavior on a grid.
Okay, so let's set the scene for anyone who's, driving or at the gym and can't see the chart. We're looking at a candlestick chart, and this is crucial. The time frame is set to weekly. Why does that matter? Why not look at the daily? Isn't more data better?
That's the first lesson. And it's a big one. The daily chart is just full of noise. It's market rumors, it's panic, it's algorithms misfiring. It's like standing on the beach trying to watch every single wave crash.
Right.
You just get wet and you lose all perspective. The weekly chart,
Yeah.
where every single one of those little bars is 5 full days of trading. That's the tide. It shows you the dominant psychology. It filters out all that erratic emotion and shows you what the big money is actually doing.
So we're zooming out to see the war, not just the skirmishes.
Precisely.
Yeah.
We're slowing the movie down so we can actually spot the plot.
Okay, let's get specific then. The scoreboard for this week leading up to February 10th, 2026. Thinkables. We have the OHLC data open, high, low, close. I'm just going to read these out. The stock opened at 787.00. It went as high as 828.00. It dropped as low as 770.00. Okay, stop right there. To a novice, those are just 4 numbers. But to a chartist, that is a whole story. It's like a 3-act play.
Walk me through the drama.
Okay, Act 1, the drop. Look at the low versus the close. At some point this week, sellers just hammered this thing down to 770. That's a psychological break. They pushed it into the basement.
Sounds painful. It was. But then comes Act 2, the rejection. The sellers couldn't keep it down there. By the end of the week, buyers stepped in, and I mean big buyers, with enough aggression to shove the price all the way back up to 823.7.
Which is almost at the very top of the week's range, 828.
Right. And in technical terms, that creates a long wick at the bottom of the candle. It basically means the market looked at 770 and said, no, that's too cheap. We're buying that.
It's a failure of the sellers to maintain control. And that transition from a new low to closing near the high, that's often the very first heartbeat of a reversal.
It's like trying to hold a beach ball underwater. You push it down, but the second you let go, it just pops right back to the surface.
That is a perfect visualization. The buoyancy is returning, the bears tried to drown it, and they failed.
Okay, so that's the micro story of this week, the current battle. But we need some context. If I look at this whole chart, left to right, over the last year. It's been a rough ride. It looks like a playground slide. It has. If you look at the far left, early 2025, it was trading well above 1,000. And since then, it's just been a series of lower highs and lower lows,
Yeah.
a classic downtrend.
But, and this is where it gets interesting, it hasn't been crashing recently for the last, 6 months? Since around August. It just looks dead. The candles are tiny. It's just moving sideways around the 800 mark.
Yes, this is what we call the boring phase, or, consolidation. And I cannot stress this enough. The boring phase is where the money is made.
That seems counterintuitive. Don't traders want volatility in action?
Amateur traders want action. They chase the shiny object. But professional investors, they want accumulation. Think about it. The stock crashed from 1,000 to 800. All the panic sellers, they're gone. They already sold. Who's left?
The stubborn people holding on.
Them and the new buyers, the institutions, who are quietly, very quietly picking up shares without trying to spike the price. They're just absorbing the supply. That's why the candles get so small and tight. It's a coiled spring.
Or like a car idling at a red light. The engine is on, but you're not going anywhere.
Yet. That is the key word. Yet. When the price action gets tight like that, it means energy is building. The market is deciding on its next big move.
Which brings us to the now, the far right of the chart. We had that dip to 770, which must have been a shakeout to scare the last nervous people. And then boom, this solid green candle this week.
And it's not just green. It's distinct. It's bigger than the candles from the last few weeks. It signals a changing character. The car has just shifted from neutral into first gear.
Okay, I'm going to play devil's advocate. I've seen stocks pop for a week and then crash again. A dead cat bounce. Right. How do we know this isn't just a fake out?
We don't. Not for sure. There are no certainties, only probabilities. But that's why we don't just look at the price. We have to look at the forensics around the price, the indicators.
All right, let's talk about those colorful lines wrapped around the candles. They look like a ripper. There's a red line in the middle and 2 green ones on the outside.
Those are Bollinger Bands.
Always sounds like a 70s rock group to me. But explain them simply. What are they actually measuring?
They measure volatility. That red line in the middle is the average price over the last 20 weeks. It's the center of the road. The green lines on the top and bottom, those are the standard deviation.
The expected range.
Exactly.
Yeah.
About 95% of the time, the price should stay on the road between those 2 green lines. When they're wide apart, the market's volatile. When they squeeze together.
Which they did for months. October, November, December. Those bands are incredibly tight. It's a narrow country lane.
That's the squeeze. It confirms that boring phase we talked about. Volatility is cyclical. Low volatility is almost always followed by high volatility. The spring uncoils.
Okay, so we know a big move is coming. But look at the relationship between the candles and that middle red line. This is what jumped out at me.
What do you see?
For months, the candles were stuck below the red line. Every time they tried to go up, they'd hit that line and bounce back down.
Exactly. The average was acting as a ceiling, as resistance. The trend was bearish because the price couldn't even get back to the average. The polarity was negative.
But look at this week, this candle for Feb 10th.
Yes, this is the breakout.
That green candle punched right through it. It's sitting clearly above the red line. It's crossed over.
And that is a technically significant event. It means the price has reclaimed the average. It suggests that the ceiling has now potentially become the floor. The polarity has flipped from negative to positive.
So we've been driving in the breakdown lane for 6 months, and we just merged back onto the highway.
We've merged into the driving lane, yes. We aren't speeding yet, but we are back on the road. The behavior has changed. And spotting that change in behavior is everything.
Okay, so Witness 1 Cry says we're rejecting lows. Witness 2 Bollinger Bands says we've broken the downtrend. But I want to check the other sensors. Let's look at the panel right below the main chart. It's labeled RSI 14.
The Relative Strength Index.
To me, this looks like a heart monitor, a white line zigzagging in a box. There are faint lines at 70, 50, and 30. What is this telling us?
Price tells you what happened. The RSI tells you the speed and health of that move. It's momentum. Think of price as the car, and RSI as his pedometer. You can be moving forward, but if your speed is dropping, you're about to stall.
Okay, so looking back at that boring phase, the RSI was way down near the bottom, around 30 or 40.
Right, we call that oversold. The selling pressure was just too intense. But look at the white line now.
It's angling up. Sharply, it's pointing toward the top of the box.
And it's interacting with a very specific number.
50. Why is 50 the magic number? It's just the middle.
Think of 50 as the equator. Below 50 is bearish territory, where the sellers have momentum. Above 50 is bullish territory. where the buyers are taking control.
And looking at it right now,
Yeah.
it looks like we're kissing that 50 line.
Yeah.
Maybe just crossing it.
We're testing it. And this is a crucial convergence. You have the price crossing the Bollinger middle line at the exact same time the momentum is trying to cross the RSI 50 line.
So wait, that's a lot of things lining up at once.
It is. It's what we call confluence. When independent indicators, price and momentum, give you the same signal at the same time, the signal is much stronger.
This feels like a pretty watertight case for a bull run. I'm almost optimistic. But there's always a but, right? We have to look at the fuel tank.
We do. We have to talk about volume.
The very bottom section. Tiny vertical bars, red and green.
Volume is the number of shares being traded. It's the effort behind the move. If price is the car and RSI is the speed, volume is how much gas you're burning.
Okay, looking at this, I see a huge anomaly. I mean, it sticks out like a sore thumb. Way back on the left, late March of last year, there's one giant green spike.
It's massive. Look at the scale on the left that says 2CR. That's 2 crore. That spike means an enormous number of shares changed hands in a single week.
A lot of interest back then, but that was a year ago. What does it tell us now?
It tells us about memory. A lot of people bought at that level, and since the price dropped, they might be waiting to sell. But the more pressing concern is what's happening now.
And what's happening now looks quiet.
Exactly. Compare that giant skyscraper of a volume bar to the little huts we see now. The volume is very, very small. It's flat.
So even though the price is going up this week, that nice green candle, the volume isn't spiking with it.
Not yet. And you have just spotted the divergence.
Mm.
This is where the debate gets interesting. The gray area.
I mean, normally don't we want to see volume confirm the move? If the price goes up, I want to see a crowd rushing in to buy. This looks like an empty room.
Conventionally, yes. You want explosive volume on a breakout to prove conviction, to know the institutions are buying with both hands.
So the fact that it's low, is this a trap? Is the price just floating up because nobody's bothering to sell?
That's the bearish interpretation, that this is a low volume rally
Yeah.
and it's unsustainable, like a balloon floating up just because there's no wind.
But you have another take. I can hear it in your voice.
I do. Consider the context. The boring phase.
Yeah.
The market has been asleep. Volume is dried up. When a stock starts to turn around from a long slumber, it doesn't always start with a bang. Sometimes it starts with a whisper.
A stealth move.
Exactly. If the heavy selling is finished, if there's simply no one left who wants to sell down at 770, then it doesn't take much buying at all to push the price up.
So the lack of volume might not mean a lack of buyers. It might just mean a total absence of sellers.
Precisely. It's a vacuum. The price is drifting up what they call the wall of worry. Everyone is skeptical, just like you are right now. You're saying, where's the volume? Is this a trap? And while everyone doubts it, the price creeps from 823 to 840 to 860.
And then when it hits 900, that's when the volume finally comes in.
That's when the crowd realizes they missed the boat and they all chase it. That's when you get the big volume spike. But by then, the smart money is already up 15%.
That's a fascinating twist. We're trained to look for noise, but the real signal might be the silence.
But we have to be prudent. You have to acknowledge the risk. Low volume does make the move fragile. If sellers suddenly show up tomorrow, the price could collapse easily. It's a recovery, but a fragile one.
Okay, so what am I watching for next week? What's the confirmation? I don't want to get into a fragile recovery that breaks.
You're watching that red middle line on the Bollinger Bands. We just crossed it. Next week, I want to see the price stay above it. I don't want it to slip back into the basement.
You want the old ceiling to become the new floor.
Exactly. If we get a back test where the price dips a little, touches that red line, and then bounces up, that's your golden ticket. And ideally, I want to see the volume bars start to grow. Maybe not a skyscraper, but a steady increase.
So don't just jump in because it's green. Wait to see if the green candle brings its friends to the party.
Exactly right. It's all about probability. The probability shifted in favor of the bulls this week. But without the volume, it's not overwhelming yet. It's a watch list candidate.
So let's synthesize this. Let's connect the dots one last time. Dot one, price action. It was beaten down, went boring, and now it's popping its head up and rejecting the lows. That's bullish.
Dot two, the Bollinger Bands. We've crossed the middle red line. We're out of the basement. The polarity is switched. Bullish.
Dot three, the RSI. Momentum is waking up, crossing into positive territory above 50. Bullish.
And dot four, the volume. That's the question mark, the missing link, the potential red flag, or the sign of a very clever, stealthy market.
It's amazing how much narrative you can pull from just a few lines on a screen. It's a map of human emotion. Greed, fear, hope, boredom.
It's the aggregate psychology of thousands of people distilled into a JPEG. And reading that JPEG is a superpower.
Before we wrap, I want to go back to that volume point, because it feels like a philosophical question almost.
How so?
We live in an attention economy, right? We assume for something to be real or important, it has to be loud, it has to be viral, have huge volume. But you're suggesting the most powerful moves might start when nobody is even looking.
Think about the massive funds, the smart money. They can't just buy 1 million shares in one day. It would spike the price on themselves. They have to buy quietly. They have to buy when it's boring, when volume is low, so they don't tip their hand.
So high volume is actually the sound of the herd arriving late to the party.
Often, yes. High volume confirms a trend, but it also often marks the end of the easy money phase. The silence we see on this chart right now, that silence might just be the sound of opportunity knocking very, very quietly.
Or it's the sound of a trap door about to open.
And that's what makes this game so beautiful. We won't know the answer until the next candle gets painted.
Well, I will definitely be refreshing the chart next week to see what happens. This has been a fascinating look under the hood. Thank you for diving into the pixels with us.
It's the greatest soap opera on earth.
And to our listener, remember, the chart is a tool, not a crystal ball. Thanks for taking this deep dive with us. Keep your eyes on the data, and we'll see you next time.